Our focus today is Ripple, a company driven by profit that caters specifically to the banking system. But before we dive in, a quick heads up. This channel is all about facts, no opinions or whispers. We know you rely on us for clear information so you can form your own informed conclusions. That's precisely what we'll deliver in this video, a straightforward breakdown of Ripple. Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation. Here, we break down complex financial concepts using a simple whiteboard format, making learning about investing accessible to everyone. In this video, we'll be shedding light on Ripple Labs, what they do, how their XRP token functions, and why they're facing scrutiny from the SEC. We'll also delve into the tokenomics behind XRP, giving you a comprehensive picture. All right, let's clear up the Ripple and XRP confusion first. Ripple Labs is the brains behind XRP, the cryptocurrency. Think of it like Apple and iPhones. Ripple Labs is the company, and XRP is their innovative product. In a nutshell, Ripple Labs envisions a world where banks and payment providers can seamlessly send money across borders in a flash, all at minimal cost. So, Ripple Labs is tackling a major pain point in today's financial system: international transfers. Currently, most transactions rely on SWIFT, a dominant protocol handling a staggering $6 trillion daily. However, as you might guess, SWIFT is sluggish and cumbersome, burdened by high fees. These fees stem from transfers bouncing through multiple banks or currency conversions. Converting currencies itself is a hurdle. Not all banks offer fast, affordable, and reliable conversion rates for your outgoing funds. So, how does Ripple Labs tackle this challenge? Well, their secret weapon is a product called RippleNet, also known as xCurrent. Don't get hung up on the names, they essentially mean the same thing. RippleNet acts as the foundation for the xCurrent product. Now, xCurrent is a decentralized system that relies on a unique consensus model called the unique node list. Here's the gist. RippleNet, one of Ripple Labs' solutions, aims to be the cure for sluggish bank transfers. Think of it as a fast lane for your money. You simply hop on RippleNet, and they streamline the transfer, making it quicker and cheaper than the traditional SWIFT system. But that's not all. Ripple Labs goes above and beyond by prioritizing anti-money laundering compliance and even throws in fraud detection for good measure. They've nailed this security aspect so effectively that a bunch of major institutions have already jumped on board. American Express is just one big name on a list that includes over 50 other major banks partnering with Ripple Labs. This might give you a hint that RippleNet's focus isn't on everyday transactions for individuals. It caters to a more complex world of financial institutions. Alongside their innovative solutions, Ripple Labs also introduced a cryptocurrency called Ripple, known by its ticker symbol XRP. Like many other cryptocurrencies, Ripple's digital asset, XRP, is powered by a blockchain technology. However, it sets itself apart with some unique features. Say goodbye to sluggish transactions and hefty fees. Ripple's blockchain boasts blazing fast confirmation times of under 5 seconds, with each transaction costing a mere fraction of a penny. But that's not all. This impressive blockchain can handle a whopping 1,500 transactions per second, far outpacing many other blockchains in the game. While Ripple Labs boldly claims to match Visa's transaction speed, I couldn't uncover any technical details to substantiate this claim. This might leave you scratching your head. How do these pieces fit together? Well, XRP, the cryptocurrency, can actually operate independently of Ripple Labs. However, for Ripple Labs to promote their xCurrent system, XRP plays a crucial role. Another key distinction of the XRP blockchain is its unique approach to transaction validation. Unlike most blockchains that rely on proof of work or proof of stake methods, XRP utilizes a different mechanism to verify and approve transactions. Instead of employing the widely used proof of work or proof of stake methods, Ripple's blockchain utilizes a unique mechanism called the unique node list. While I'll try to explain this in a simplified manner, it's essential to note that this approach leans towards a more centralized structure. All right, here's the gist of the unique node list. Instead of the usual proof-of-work or proof-of-stake systems, Ripple Labs handpicks a group of trusted entities to form this list. These chosen nodes then collectively decide which transactions get added to the blockchain. In simpler terms, it's a majority rules system based on Ripple Labs' selection of validators, rather than relying on complex computational puzzles or locked-up cryptocurrency. It's also worth mentioning that XRP, like many other cryptocurrencies, is divisible into tiny fractions. The smallest amount is called a drop, equivalent to 0.001 XRP. This divisibility allows for greater flexibility in transactions, particularly when dealing with micropayments or fractions of a penny. Circling back to the XRP blockchain, another key point to consider is the lack of rewards for running a validator node. This absence of incentive might leave you wondering, why would anyone bother? After all, the potential for generating fake transactions wouldn't exactly be a trustworthy motive. A common criticism surrounding XRP is its perceived centralization. Critics argue that the unique node list, with its centralized selection of validators, compromises the decentralized nature that many blockchain enthusiasts value. They express concerns about potential manipulation and lack of transparency within this system. Since we've touched upon centralization, let's delve into how the various aspects we've discussed contribute to XRP's overall centralization debate. A major draw of cryptocurrencies lies in their decentralized nature. This means we sidestep the traditional financial system, where banks hold significant control over our money. If XRP is indeed centralized, then one might question its suitability as a decentralized alternative to traditional finance. After all, the very essence of cryptocurrencies lies in their decentralized nature, which aims to remove control from central authorities like banks. Once Ripple Labs released the XRP Ledger Consensus Protocol, XRCP, that governs the XRP network, they relinquished control over the network's operations. This decentralized structure empowers the community of XRP holders and validators to maintain the network's integrity and functionality. Similar to how the Bitcoin and Ethereum communities maintain their respective blockchains, Ripple Labs can also play a role in the upkeep and advancement of the XRP network. They can propose updates, enhancements, and potential modifications to the XRP Ledger Consensus Protocol, XRCP, for consideration by the broader XRP community. In essence, XRP's operation is independent of Ripple Labs' direct involvement. However, certain other products offered by Ripple Labs, such as its payment solutions, rely on XRP's functionality to operate effectively. A significant concern surrounding XRP is the potential for collusion among validators on the unique node list. This hypothetical scenario could involve a group acting together to manipulate the network and authorize illegitimate transactions, essentially draining your funds without your consent. As I mentioned earlier, XRP validators do not receive any compensation in the form of mining fees or staking rewards. Their presence on the unique node list stems from other factors, such as their technical expertise and commitment to maintaining the network's integrity. Moving on to their securities issues, the Securities and Exchange Commission, SEC, a regulatory agency in the United States, is arguing that XRP is actually a security, not a currency. This is a significant lawsuit because it establishes a precedent for resolving similar cryptocurrency-related cases in the future. The SEC alleges that Ripple's co-founders have been treating XRP as a security, akin to a stock or a bond. If this is indeed the case, the regulatory framework governing XRP should be revised. Instead of focusing on Ripple Labs, it could be said that the United States government is the one making more noise. In a nutshell, the government seems to be unhappy about the fact that XRP could be seen as similar to a stock. However, these SEC issues are definitely unrelated to most of the inherent centralization concerns. All right, let's dive into the nitty-gritty of tokenomics, the economic model that makes the whole thing tick. XRP boasts a capped total supply of 100 billion tokens, ensuring no further minting. Out of this predefined pool, roughly 20 billion were allocated to the founders. XRP boasts a capped total supply of 100 billion tokens, ensuring no further minting. Out of this predefined pool, roughly 20 billion were allocated to the founders, with an additional $7 billion distributed to Ripple Labs itself. The remaining $73 billion were initially offered to a combination of companies and individual investors. Interestingly, Ripple Labs receives a monthly allocation of 1 billion XRP for a predetermined 33-month period, further contributing to the overall distribution. While there's talk of a unique vesting schedule for Ripple's XRP holdings, the burning of transaction fees and the potential for lost or forgotten wallets introduce a subtle deflationary effect on the overall supply. Interestingly, the official XRP Discord is the first online community I've encountered where I've witnessed active opposition to the coin. This stands out to me because I typically use Discord servers to address lingering questions after conducting my own initial research. And that's it for XRP in today's video. If you found it informative and helpful, please give it a thumbs up and subscribe to our channel. Your support will be a great motivation for us to continue producing educational crypto market content for everyone.